Assalamu alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I was planning to do a portfolio update, but because we did one not long ago, there's no point just going through every single stock and buy. I haven't made a lot of buys and sells, so what I'm going to do today is slightly different. I'll still give you a portfolio update and I'll tell you buys and the sells and so on. But what I'm going to do is I'm going to focus on the top 5 companies that are performing really well since the beginning of the year, and I'm going to talk about the 5 that are not doing so well, and then I'm going to give you the entire portfolio. And there's one interesting stock that I actually didn't think will do well that's actually done quite good, so I'll share that with you as well. So we'll do the 5 best and the 5 worst performing stocks since the beginning of the year, and then I'm going to talk about any buys, any sells, and so on. I'll give you a little bit information about each one of these stocks okay, so it might be a little bit long video, but in terms of dividends and so on, I'll talk about that in the next video, inshallah. If you're enjoying this type of content, and like I've always said to you guys, all I'm doing here is sharing my journey. I'm not giving you financial advice. I don't know everything. I'm still learning. I've learned so much in the last 4 or 5 years, but I'm sharing that with you guys. And if you enjoy it, please just like the video, subscribe to the channel, obviously join us on the Patreon account where you get access to a lot of things that I actually offer here, and you can join us on the Discord, inshallah, where we'll try to build a like-minded people that can help you, inshallah, in the long run. My aim, inshallah, is to help brothers and sisters out there, to show them what is actually doable, instead of listening to the all these naysayers, people that will come to you and say, oh, stock market is haram, you shouldn't be doing that, you shouldn't be doing this, but they never tell you what you should be doing instead. And I'm going to try to do that, inshallah, as much as I can. Obviously, I'm human. I will make mistakes, and I apologize if I do. But please always do your research, because I don't want you to lose money. It's not nice, okay? Please always do your research. I promise you, like, I don't know everything. I'm trying my best to do the research and share it with you, but I'll make mistakes, and I don't want my mistakes to be your mistakes as well. So always do your research, inshallah. So I'm going to give you the 5 best performing stocks first, and I'm going to just do it from 5 to 1, 1 being the highest performing stocks for the year. And the first company we're looking at today is ASML. ASML has been in my portfolio for quite some time. A year to date is actually up about 20% so far. It's a great stock. It has a monopolized the market, and the equipment that they sell, basically none of these Nvidias and all of these companies will ever survive without their equipment. Nvidia does not buy the equipment, obviously. The companies that buy TSMC is actually buys their product, ASML products, to make the Nvidia chips, if you like. So if we look at the estimates moving forward, because that's important, when you invest in a company, you need to know that the company actually at least has a decent revenue coming in the next few years. And one of the things that I want to show you quickly is the earnings per share. This is just estimates. And if we just focus on the first 3 here, okay, you can see the number of analysts, 28, and 25. And you can see 37% basically increase in terms of EPS this year, and this year. Next year about 15%, and the year after that is 28%. Now sometimes these people can be wrong and they can change their mind, but that gives us at least an idea of where the company is heading. We know the company, a lot of 28 people here are not all wrong, okay? So there might be some that are in the right, basically on the right track and so on. In terms of revenue side of it, it's also important to look at that, because you want to see if the company is growing their top line. If a company is actually bringing a lot of money, then they can retain some of that money as a net income, either pay as a dividends or pay free, add to the free cash flow. You reuse that in the business to grow the business and so on. So it's really important that they have a consistent growing revenue every single year, every single quarter, inshallah. Now 27% is actually decent for the year. I say decent, really good. And then almost 9% for in 2024, and then 2025 we're looking at about 18%, which is really good. And if you keep going down, you'll see it's actually growing it. I mean, only 4 people are looking at in 2027. Only Allah knows what's going to happen by then. But it is heading the right direction. This is what I like about this company. Very quickly, I'm going to show you the ratings, as you can see here, okay, on this side here. So Seeking Alpha is actually saying it's a buy. Analysts are saying a buy. Wall Street analysts are saying it's a buy. Quant, which is the system this website uses, is saying is a hold at the moment. Now if we go to Morningstar, for example, okay, you will see basically it's 4-star stock right now, and 750 is basically where they think the price should be. okay, which is quite good. Now if we look at Refinitiv ratings, is also $706 per share right now, because you can see it's 662. And if you look at tip rank as well, another company that I use normally, $785 per share, is a moderate buy. They have 2 buys and 2 holds, so there's not a lot of analysts looking at this stock. So overall, a great company. I really like it. I'm gonna continue holding on to it. I'll probably add to it in the near future, but for now it's the basically 5th performing stock for since the beginning of the year. Surprisingly, the next best performing company, the 4th best performing company, is Cisco in my portfolio. I really didn't think this would happen, but it has happened. And one of the things I actually did, and I'll tell you in the end, I actually trimmed this company not long ago. It's not because it's overvalued or anything else, but I needed that money for something else, which I will show you in a second. And it made sense to trim. But as you can see, it's about 21%, 20% up this year, which is quite good. If we look at the earnings, and this is probably one of the reasons I was a bit hesitant about having that much money in this company, this is a steady Eddie kind of company. Like it's not a massive high growth company. You can see it's about 5% in a good year if you think about it, okay, in terms of EPS. In terms of revenue, this is where I was a little bit disappointed. So like about 1.5%, 2.67%, 2%. So I do have some consumer staples companies that are doing better than this. So as a technology company, it made no sense. So I still have half of my shares, and I sold the other half. I'll share it with you in exactly what I'm going to do with this company going forward, inshallah. So let's have a look at now for example, Refinitiv is actually saying it's a fair valued right now, basically. If we look at tip rank, for example, let's see what they're saying. I haven't looked at this yet. So they basically $56 per share is exactly where it is right now. So it is a hold according to them. And Morningstar is giving about 3 stars. 56 again is exactly just above where it is right now, which is about $57 per share. So that's the second company I want to talk about today. Number 3 is Microsoft. Microsoft does not need an introduction. We all know exactly what's happened this year with the AI situation. Right now, since the beginning of the year, it's up about 37%. It has given up a little bit of that, basically early gains at the beginning of the year. I think in beginning of August, it's actually gone down quite a bit, and then it's bounced back a little bit in the last week or so. So as you can see, it's up quite a bit. If we look at the earnings, for example, moving forward, because we want to see if this company gonna get, if it's gonna make us money moving forward. That's the most important thing. And as you can see, in terms of EPS, we're looking about double digits for the next 3 years. In terms of revenue, exactly the double digits as well. I love this company, and you know how I feel about it. It's doing really great. I mean, now they diversify in their portfolio. So we'll see what happens with the AI situation. So I'm gonna hold on to this. I'm not gonna add to it anytime soon. If we look at the ratings, for example, this is the reason. Okay, you can see here it seems a little bit overvalued. Wall Street is still bullish on the company. They're saying is actually a buy right now. If we go to for example, by the way, the website I'm using here is Interactive Brokers. They have an ISA account, and it's actually quite good. I've been using that for the family portfolio, so that's why I have access to it. And you can do a lot of the research here. You don't even need to use another website, which is quite nice. But Refinitiv ratings is actually right now about 18% undervalued according to them. Tip rank is saying, let's go and okay, there we go. Tip rank is actually saying about $390 per share. Right now, as you can see, it's 320. So let's call it 330. That's about 18% upside going forward. It's a strong buy from them. There's loads of analysts looking at this company for that reiterated basically what they've said before, and each one of these you can see the firm they work for and so on. And then finally, if we look at the Morningstar, it's 3 stars right now, 360. Right now it's about 330, so $30 from where it is right now. So again, another great company that I have basically done really well in this like in this year. Next one is Broadcom. Broadcom actually just reported yesterday, so I'm going to show you quickly. It was down. It reported the day before yesterday, and it was down quite a bit after the call. But there was nothing to worry about. In terms of EPS, they actually beat that. In terms of the revenues, they actually beat that as well. They talked about basically buying back their own shares. They talked about dividends. They bought back about 2.9 million shares. So that means when the company buys back their own shares, that means they completely eliminated that. So now their EPS obviously goes up. And for us as investors, if you had one share of this company, now that is worth more than what it was worth before. That's why we hate when companies dilute their shares and so on. So I didn't see anything that was huge. I mean, you know, when it comes to Wall Street, they just look at one quarter and just say, oh, the world's about to end, this company is going to be bankrupt, and for that reason we're going to sell it. For whatever reason anyway. Maybe some people will taking some profit because it has gone up quite a bit. Now, looking at the earnings moving forward, there's not a lot to scream about when it comes to that, to be honest with you. About 12%, 10%, 10%, and so on. And then when you look at the revenue, it's about 7%, 8%, 6%. So I expected this. This is basically what I expected from this company for a long time. So hopefully going forward, the AI situation would help the company moving forward. And if you look at the ratings, this is really interesting. It's basically a buy from Seeking Alpha analyst, a buy from Wall Street, and a strong buy from quant, which is not normal. Okay, so overall, it seems really basically undervalued at the moment. And if we look at Refinitiv and ratings, you can see at the moment it's a buy and about 7% upside from where it is right now. In terms of tip rank, you can see as well it's a strong buy from them, $965 per share. Morningstar is about 3 stars right now, $790 per share is where they expect the price to be. Right now it's about $100 over that price, so a little bit overvalued according to them, but it kind of looks like it's basically fairly valued at the moment because there's 3 stars there. Now, final company is Palo Alto Networks. I wish I had this company from day one. I've talked about it at the beginning of the year. I thought I should add it and didn't add it at that point for whatever reason anyway, but I've bought it back recently, and since I bought it, it's up a little bit, but obviously since the beginning of the year it's actually up 75%, which is absolutely crazy if you think about. Now, if we look at the financials in moving forward, you will see one of the reasons why this company has gone up so much is because you look at this. Cybersecurity is one of those basically fields right now everybody's talking about. People getting attacked left and right, the US government getting attacked and so on, and companies have to protect their data. And for that reason, obviously, this company is doing really well, and any company in that field is actually going to do well moving forward. But this is my favorite out of the 3 that I know, the 49 and CrowdStrike, and this one. This one is actually my favorite. I do like CrowdStrike because it's a different kind of cybersecurity company. But 20%, 20%, and 23% for the next 3 years is absolutely huge in terms of EPS, in terms of revenue as well. 18%, let's call it 19%, 19%, 17%. Look at this, from $8 billion in 2020, let's call it 30. So basically, basically $20 billion. So it's gonna double in the next, I don't know, that's like 5 to 6 years is going to double basically there in terms of that. But obviously these I'm only going to focus the first 3. The next is basically only 2 people, you never know. But yeah, there you have it. That's basically the other company that I wanted to talk about as well. Like now, if we go to Refinitiv ratings, for example, as you can see, it's a buy, about 12-13% upside from where it is right now. If we look at tip rank as well, it's a strong buy. $279 per share is what they expect, and Morningstar about 3 stars right now, $225 per share, 240, so just slightly above what they basically call it fair value right now. So that is the 5 best performing companies, okay, and I'll show you very quickly. So you can see ASML is there, you can see Broadcom, Cisco. So what did I do with Cisco? So just to give you that information now, Cisco, I had 44 shares. I trimmed it in half, okay, so I took half of the money and then I bought it with Palo Alto Networks. And the reason I did that is not because I hate basically Cisco. It was because I have to have a portfolio management, so I didn't want to buy a new technology company and add fresh money. So I had to trim something to buy it, because otherwise technology will be, I don't know, 30-40% of this portfolio. There's nothing wrong with that if that's what you want, but for me anyway, that's what I thought. So I sold half of my Cisco shares and then bought it with Palo Alto Networks, and as you can see right now, it's up about 12% or $105 per share. I will actually love this company to be at least a 5-6% of my portfolio. Another company that I've just talked about is Microsoft, which is there. The other company that I want to talk about now that should be on that list is this one here, Visa. Visa is up quite a bit as well. I think it was if Palo Alto Network wasn't here, Visa would have been the 5th place if you overall, because Palo Alto Networks actually took the first spot. So now what I'm going to do is, I don't want to make the video any longer, so I'm going to show you all the companies that were not doing well, and then I will show you the entire portfolio and how it's done since the beginning of the year. And here you have it. Basically, Nike is the worst performing company in my portfolio right now. It was a recent addition, as you know. 3M hasn't done well, but it's cleaning up things right now. So I'm hoping the next couple of months, by this time next year, it will not be in my portfolio, and I will break even and take my money and run away with it. The reason I say run away with it is because there's not much of growth in this company going forward. For that reason, I'm going to take that money and put it into something else. Rio Tinto is another one. I'm happy with Rio. The fact that Rio is down, so I can add more because I need to buy a bit more of this company. J&J is also down, and Cummins is also down. So these are the 5 companies that are down. The 5 I shared with you are here, and like I said, Visa, it wasn't even 16%, it's 19% actually. So it was basically up 19% since beginning of the year. So it's worth mentioning that company. Now I'm going to show you the rest of the portfolio, and the one that surprised me the most is this. This is the Islamic ETF. It's up almost 17% since the beginning of the year. It's absolutely amazing. If you are new to investing and you just want to hustle less, or whatever the word is, right? And you don't want all that hassle of learning about buying individual stocks. It's a good idea to learn, by the way. You should learn about how to analyze stocks and so on. But if you just want to focus on just buy ETFs and forget about it, this is probably what you should be doing if you're new. Buy quality ETFs and leave them alone. This is one of the ones that I have in my portfolio. I'm not going to say go away and buy it. Obviously, do your own research. But the fact that it's up 17%. Imagine if you dollar cost average into these ETFs. Now some of you do this weekly or monthly. So imagine if you just dollar cost average into this every single week without having to worry about what happens in the market. You will be up right now 17%. Look at me. I've been trying to pick up basically all of these stocks, right? And it's done better than S&P and Global. I don't know if that's going to continue in the long run, but it's actually done better than the S&P and Global. It's done better than Qualcomm. It's better than UNPs and companies that have actually been bullish on buying in the last few months and so on. Obviously, some of them will come back, but however, it's actually not a basically good ETF, bad ETF at all. So it'll be interesting to see how moving forward by the end of the year where this is. But right now it's about up 17%, which is really, really good. And I think that should be, if you're buying this every single week, every single month, well, credit to you guys, because obviously you've done really better than majority of these companies that I own in this portfolio. So before I stop the video, I just want to mention a couple of buys that I made. So I added so there wasn't a lot because it's been 2 weeks since I did that video to kind of give you a summary of what happened in July. So I added a little bit of Reckitt, I added a little bit of Nike, I added a little bit of Public Storage, as well as the AstraZeneca. So these are the 4 companies that I've been adding to, and obviously, like I mentioned already, I've trimmed to Cisco to buy more Palo Alto Networks in this portfolio. I'm going to continue doing this. I'm going to continue sharing this my journey with you guys. I've got another video coming up just to kind of summarize basically the dividends that I've received in the month of August, inshallah, and then from 1st of October I can give you a full portfolio update for the month of September, inshallah. So that's the plan moving forward. Again, I've got a few other videos that I've got planned for us in the next couple of days, next couple of weeks, inshallah. If you're enjoying this type of content, please, all I ask you to do is join us on the Patreon as much as you can, if you can. If you don't, okay, then just go to the video that you're watching right now and subscribe to the channel and like the video and comment if you can, whatever it is you could do to support the channel, because honestly it takes a lot of time and research. In fact, I recorded this video yesterday not knowing the mic was actually switched off, and then when I woke up this morning and I checked it and I was like, oh, is not there. So I had to basically record this again, and it takes a lot of time to record and do the research and so on. But I really appreciate if you can support by doing whatever you can, inshallah. Have a wonderful day. Assalamu alaikum.